To remain updated with the latest business news, click on the bell icon.
Hello and welcome. You're with us here on Business Today TV. I'm Bakaya and you're welcome to yet another edition of our pre-budget special. Today we're looking at what the street's expecting from the upcoming Union Budget 2022, which will be presented by the Finance Minister Nirmala Sitharaman in Parliament on the 1st of February. To discuss this, we have with us Andrew Holland, CEO of Endus Capital, Nilesh Shah, MD and CEO Envision Capital, and Mahesh Patil, CIO Aditya Birla Sun Life AMC. Great to have all of you together, such powerful voices to give us a real insight into what the street is expecting this time around. And I must say, with markets having been very upbeat at the start of the year, the question did come to mind. Is this a pre-budget rally? Even though I know for the most part, experts these days tend to dismiss any kind of lead-in, according to budget expectations. But just given the kind of momentum we continue to see, what can we expect this time around? Mahesh, let me start off with you.
Sure. No, so I think on the budget perspective, I think it's very difficult to say. But I think one thing is clear that we are coming out last year from the pandemic, and while the markets have rallied and corporate earnings growth has been fairly strong, but the underlying economy is still really not to its full potential, right? It's still struggling. I think consumption it has been weak. We see rural consumption getting impacted, and I think it's important. And this budget also is like 2 years away from the final elections, right? Election which are there. And so I think the government will do everything in its power to see that growth comes back, right, to its potential growth rate of around 6.5%, 7%, which what we should be looking at 2 years down the line. And to enable that, I think we clearly on the to spur demand, which is still kind of weak. I think you'll see measures being taken towards that, especially the rural side of the economy, which has got impacted after the second wave of COVID. Right. I think you will see some support to that. And also to improve general consumer sentiments have also been a bit weak and tracking lower. So all in all, I think normally the budget we've seen a lot of impetus to investments, for future capital investments, the infrastructure side. While that will continue, I think, which was there in the previous budget also, I think those efforts towards that will continue. But at the same time, I think the government is also trying to really the fiscal deficit. After the pandemic, we've seen this year we'll have a fiscal deficit of around 6.8%. We're expecting that probably they would be comfortable around 6% for next year, because I think the government will slightly go slow on the whole fiscal consolidation path and ensure that the growth stimulus is there for the economy to really come back to its potential growth rate. So some boost to consumption. On infrastructure, there will still be challenges because the government ability to fund that is going to be limited. Right. So I think we could see some infrastructure bonds being. I think budget will probably pave a way for that. Right. There's a holding company which has been formed by the government, right, to look into the investments. So instead of on balance sheet, you could see some off balance sheet kind of funding being done, to spur the investments into the infrastructure side.
Okay. Andrew, let me bring you in on that point. As Mahesh also touched upon, while room for spending may be limited, they are expected to perhaps talk more about boosting capex across segments like infrastructure, which also will help to, whether it's infra, construction, roads, railway, also help to create employment and really get the economy going. Is that really what you're looking at in terms of where we may see a fillip, post the budget?
Yeah, so, I mean, actually expectations are probably high. I mean, the last budget was very good. So, if she can just carry on from where she left off, that would be good news too. But I think it's right. I mean, urban consumption has been increasing, but rural consumption hasn't. So obviously that's where I can see the government kind of focusing their attention, particularly as you've got some elections straight after the budget, local elections coming as well. So I can imagine that there'll be certain amount of stops towards generating consumption across the rural economy. So that's good news. I think the problem the government might face in terms of capex spending, which has been hasn't been as great as we would have hoped. It's obviously with bond yields and interest rates rising around the world, and obviously we would expect rates to rise here. That just increases the interest cost for the government. So it will put a little bit of a dampener. But maybe if they can just kickstart the economy a little bit more, get the animal instincts going of the private companies to get their capex going, then that would have a multiplier effect across many different industries, particularly those supplying materials and so forth. And I think the other areas which they've been working on and done a very good job is obviously on manufacturing. Maybe there can be some more incentives there for manufacturing in different industries and digitization. I mean, this whole digital kind of growth that India will see, maybe there'll be more focus towards that to continue for that to grow. So those are kind of basic things. I mean, obviously, listen, we've been saying for years now, we always want reduction in taxes, whether it's stock market taxes or personal taxes. If it came, it would be great for the market, but expectations are very low for that.
That seems to be the general consensus on taxes. Nilesh, what about you? Of course, the laundry list is very long in terms of sectors, particularly bruised sectors like services, travel, hospitality, that may, of course, want some kind of SOPs or acknowledgement from the government. But very often, some of that isn't always addressed in this one document. What's your biggest expectation from the budget this time around?
Well, honestly, I would probably kind of look at this budget as basically being a continuation of where the finance minister had left off during the last budget, and I think during the last budget was way more growth oriented, and clearly I think the economy has done relatively well over the course of last 1 year. Clearly on the tax collection front, especially the GST side, there has been a huge amount of positive surprise. So to that extent, I think there will be a very high level of cushion to kind of plow that capital or the collections back into the economy. So I clearly believe that this budget would essentially be a reflection of what the finance minister, the prime minister said yesterday, that this is probably the best time to invest into India. And therefore, how do we further improve the investment climate in India? And I think the budget is probably the best platform to kind of continue to build on to that aspiration which the Prime Minister shared yesterday. And I clearly believe that's the way forward. In addition to the investment side, the capex side, I think two powerful things which will be running through this budget, or which could potentially run through this budget, is basically increased digitization, which means that how does India increasingly digitize itself at a much faster pace? I clearly believe that's essentially one of the sources of growth. And that's the way of how we could make our growth a lot more inclusive. And second is decarbonization. That to me is going to be the second biggest factor, the second biggest theme, which is going to be there in the budget. So I think it's going to be a combination of investment, growth, digitization, and decarbonization. These four to me are going to be the pillars of the budget.
That's really interesting, and given, of course, some of the recent announcements being made in order to, further their ambition of achieving certain goals on that front, we could definitely hear more outlined in the budget this time around. In terms of growth, and I know you all sort of touched upon it and shared some targets, or the fact that we all want to see, what they do to continue to boost growth. What do you feel is a reasonable expectation or target, given that where we are at currently in terms of valuations may be a little steep, but there still does seem to be a lot of room for earnings to catch up. How do you see that trajectory playing out, given the combination of what we might see on rates and inflation vis-a-vis what we might see to propel growth? Mahesh?
Last calendar was a year where we saw markets slightly run ahead of the fundamentals on the back of huge amount of liquidity, low interest rates, also a rebound in terms of the global growth. This calendar year, what we're seeing is that while growth continues to improve a bit, at least in India, but overall the liquidity environment is going to probably tighten a bit. Okay, that's what it looks like. We've seen Fed announce the tapering, and interest rates are going to rise, right? The policy rates are going to rise. The US is talking about 3 to 4 rate increases this calendar year. In India, probably we'll see 2 to 3 rate increases. And so in that kind of an environment, and also while growth is improving, global growth will be a tad lower than what it was in the last calendar year. So in this kind of an environment, you would see that some normalization of multiples will happen. The P multiples had gone ahead of the market, the economic fundamentals. But I think the earnings growth will still be fairly strong because we are still coming out from a bottom of the economic cycle. And we expect that the earnings trajectory, even in FY23, I mean, FY22 expectation is around 30-35% earnings growth for the Nifty. And that can still be around 17-18% growth in FY23, driven by some of the domestic cyclical sectors like banking and financials, the auto sector, the industrials. So while the earnings growth will still be in the mid-teens or the high teens going forward next fiscal year, but because of some moderation in the P multiples on the back of the tightening policy conditions, you could see the market returns could probably be more moderate, right? Slightly lower than the earnings growth is what we should expect in this calendar year. And also, you would probably see more volatility than what we saw last year. Last year, it was one of a kind of a secular bull market, right? Without any much correction, except probably in the latter half of the calendar year. I think this year you could probably see more volatility in the market, and that's what I think investors should brace in for.
Okay. In light of that, Andrew, would you look at perhaps, realigning an ideal portfolio, given the kind of gains we've already seen, given what the government may choose to prioritize now going ahead? What would you say, would be some of the changes, if any, that need to be done strategically for an investor?
So I think, Abha, I think the key is this: is that whilst our earnings forecasts are more, between that 10 to 15%. Why are we a little bit more kind of lower than maybe the consensus? Is that with this supply chain problem still there and inflation rising, I think it's good. I think a lot of corporates are going to have to take a margin squeeze, and they can't just keep passing it on. Right. That's not just in India; that's globally. And the worry is that with the Fed, being aggressive, possibly on interest rates, it could spin the global economy, towards recession. Actually, before they kind of do a reverse turn, which can't be good for exports for India, which has been doing very, very well. So I think that just the first half might be a bit of a squeeze on earnings, until we get some kind of clarity of whether we are going to see a big slowdown globally. Already you're seeing it in China, and forecasts are being brought down there. So what I would say is that domestically there's going to be the reopening of the economy, and I think if you look at hotels, airlines, the operational gearing there is just absolutely huge. And I'm sure, I don't know about you, I know you travel a lot, but maybe you might travel a little bit more in India because you're not sure of what might happen next, and if you're going to get caught in the country or coming back or quarantine. So I think people will still, for at least the first half of the year, see how things play out globally in terms of travel, and maybe do more travel internally. So I think the kind of economy-facing kind of sectors are going to do well. Right. And within that, with other sectors, say the autos, we're all getting excited on electric vehicles, whether it's two-wheeler, four-wheeler. What I don't know who might be the winner out of all of those. I mean, I can take a guess. But what I do know is that all the auto parts suppliers are going to have to supply them first of all, and then they're going to be worked out. So I think there's going to be themes within the market this year, which will really where you can make the money. So I think it's a barbell approach. I think you have some of your defensives like IT and pharma in there, and you have some of the growth stories and themes playing out in the first or second half of the year.
Okay, fair enough. Let's also look at, perhaps on the financials, Nilesh, what some of the expectations could be. A lot of industry-wide expectations from financials, of course. They're looking at perhaps something announced for PSBs. That's on one hand. On the other hand, perhaps some regulations for NBFCs. That's also something that's been broadly spoken about. Anything that you're expecting or hoping for when it comes to the financial segment?
Nothing in particular which the budget can basically address, but basically I think the whole idea is that the key focus of the budget and of the previous budgets and going forward is going to be an increasing formalization of the economy and financialization of savings. I think these two are essentially going to be the most powerful kind of themes that the budget would be trying to kind of work upon. And I think within that, whatever reforms that have cumulatively happened, starting from basically the Aadhaar and the Jan Dhan accounts to as recently as the account aggregator framework, clearly, I think there has clearly been a chain or a string of reforms out there. And it's quite possible that the budget could continue to unveil similar kind of, in a way, introductions or breakthroughs, which could further the cause of both formalization and financialization of the economy. Clearly, if it is in terms of basically any of the administrative stuff, I'm not too sure whether that budget is going to be the right platform for that. There could be some bit of capitalization of PSU banks and things of that kind, which have essentially been very standard features. But I think beyond that, I don't think there's going to be anything hugely different from what essentially has been happening over the last 7 years.
You touched upon it, and of course, any tax changes for IFSCs or relaxation from digital tax, some kind of framework for cryptocurrencies, of course, is going to be a big one. I'm not sure if it will come through in the budget itself or later, but and I can see Nilesh already smiling on that one. Anything change in your view when it comes to cryptos? Is that something you're viewing, if not as an investor, but with mild curiosity and interest?
Well, no interest in cryptos per se, but I clearly believe that there's been a fair bit of debate for a reasonably longer period of time. So I think maybe it's probably now, there couldn't have been a more opportune time than now to basically deal with crypto and bring a lot more clarity in terms of whether, we are open to cryptos and how would that be taxed, how would that be traded and things of that kind. So that is something which needs to be closely examined. I mean, I think more importantly, rather than looking at cryptos as an asset class, I probably think of it as one more way of a global linkage. That if the world has accepted cryptos, how does India become a part of that? Because finally, we all live within, globalization. And so to that extent, India will need to take a call on this at some point of time. I probably think that there couldn't be a better time than now to basically take a final view on cryptos.
Andrew, what about healthcare? While we may see an overall expenditure increase by the government on that area, there are certain pockets of the market that stand to benefit. For instance, if we see further SOPs announced for segments like hospitals.
No, I think the government will continue to focus and spend money on the health sector. I mean, if COVID hasn't taught us something, then it would be pretty poor of us to kind of leave the sector untouched. So I would suspect that we'll continue to see more monies kind of expended towards the health sector. I mean, but we're all going to spend more money anyway going forward. So if we have the infrastructure and it's feasible for the hospitals to expand, then I think that will be great news for us all, right? I just want to touch on the crypto though, because I think it's an important point. In that I do feel that the government will probably make the right moves here. And whether it's a tax as an asset or not, I'm not really that worried. It's more about the missing out part, because we know globally what's happening with NFTs. You know what's going to happen with the meta, and to miss out of that whole development process, of which Indian people, I think, can be at the forefront of all of this, would be a big revenue earner for the government to kind of walk away from. So I think if you look at the bigger picture and just go away and say Bitcoin and buying and selling coins, we're all going to be doing something different in terms of how we buy things in the future, not just through Amazon or anything else. It could well be through the metaverse and other places, which are developing very, very quickly.
This is so interesting, and I think it's one of the few times that I'm hearing how perhaps crypto can evolve into an actual tangible asset that people consider and not just a volatile investment bet. But Mahesh, let's talk about divestment, because that's a big one. And while there may have been some delays, we've got LIC, BPCL very much in the news. What's on your radar when it comes to divestment?
So divestments has been kind of elusive. I think this year also probably will not meet the target. Again, it can be blamed on the pandemic, and a lot of players would not be able to do their due diligence. But I think the government is fairly committed on that, looks like, and they haven't really used alternatives to really monetize, like doing the ETF, like ESU ETFs, which they had done earlier. So clearly, they are looking at more strategic divestments, because that's where they can get the real value of the underlying assets. And I think some of these, a lot of work has happened over there in a lot of these large names which they have announced. And already the list of companies, okay, where they want to divest, I mean, that list is ready. So I think the preparatory work has been done. It's just a question of timing because of the current environment. But I think most of these things will get deferred into the next fiscal year, looks like. And I think you should see more of these divestments coming to the light. Also, I think government has last budget, they indicated about kind of a national asset monetization program, okay, where they identified around 6 lakh crores of assets. I think you could see some more clarity on that, how they're going to monetize that. And so I think it will be in work in progress. There is LIC, as you know, is a large ticket divestment, and that alone can take care of bulk of the heavy lifting of the whole divestment program. But one has to wait and see, okay, how soon they're able to really come in and tap the equity market. There should be decent appetite for that. It's the largest insurance company, and there should be a lot of retail interest in that, as well as institutional interest. So while this year looks challenging, I think next year, looking at the preparatory work which has been done and the assets which have been identified, I think it should be a fairly good for divestment, presuming that the markets still remain buoyant as what they are.
Okay. So just as we wind up then, and I think we've covered a lot of ground, and I've got a sense of what each of you are sort of expecting from the budget, or looking at 2022 with, in terms of a strategy or a point of view as to which themes will dominate. Since we are having a conversation with some of the best market minds, have to ask you, in terms of sectors that you feel will dominate in 2022, with or without a slowdown, even with easing liquidity. Is it going to be deep cyclicals, export oriented, urban consumer, manufacturing? What would be your pick? Andrew, let me get your favorites first.
So I said it's more of a barbell approach, Dava. I mean, the telecom sector, digitization, 5G, 6G, all to do with the metaverse and everything, I think is going to play out, very strongly over the next 1 to 2 years. Within the banking sector, I'm probably, less bullish. I think there's a lot of disruption going on, not only in the private banks, but with obviously newcomers coming in as well. So I think it's going to be a struggle, to be honest, for the financial sector. So I'd rather kind of go more towards the insurance and asset management companies. That's probably where I think that the things will play out better. And in terms of the kind of local economy, obviously I've mentioned hotels and airlines, I think will do well. And within the autos, look for those auto part suppliers to the EV industry. They're cheap, and they've got a lot of catching up to do. So those are the kind of broad themes I would play at this point. I mean, again, defensive, more pharma, but I'd probably have IT and telecom there more than pharma at this stage.
All right, got it. That's a nice comprehensive list. Nilesh, what about you?
We'll continue to kind of have a bottom-up approach. Look for companies which you believe are going to do extremely well across these 4 pockets, which is basically deleveraging-led capex. Really, that's going to be one big, powerful area where I see continued sustained growth momentum. The second essentially is demand-led businesses, be it across urban or rural demand. The third is digitization. I clearly believe that A lot of, especially consumer-led businesses, are powered by technology and digitization and could sustain basically pretty strong growth going forward. And the last is around decarbonization, which broadly is around renewables, electric vehicles, and those kind of opportunities. So clearly, like these four pockets, and I of course, these are pockets which have done well in 2021. And I believe that this will continue to be the course for 2022 and even beyond 2022.
Fantastic. Mahesh, closing comments from you.
Yeah, so just I think continuing, I think broader theme, I think if you look at for going forward would be domestic cyclical. I think India's recovery has still been lagging behind, but I think you should see that there are enough legs for economic recovery to really improve, even as global growth slows down a bit. So domestic cyclicals, so be it banking and financials, where you will see credit growth pick up, credit costs will come down, valuations are reasonable, so that looks to be a good sector to do well. Real estate is another sector which has kind of come out, after almost 6-7 years of a down cycle. And the conditions are really good in terms of interest rates. The affordability gap has come down.
Yes.
There's a lot of organized players coming into that space. So that sector could also have a good cycle for the next 2-3 years. And all the sectors linked to that should do well. And finally, I think while it's still early days in terms of revival of the private sector capex, but the way the government focused on manufacturing, the whole PLI schemes, the China Plus One policy, I think we are seeing some green shoots on the capex front. Companies are talking about it. So if I take a 2-3 year view, I think industrials, could be the sector to watch out for, which again has been in the last 5-6 years, hasn't seen much of a growth. Whole investments to GDP has collapsed. I think we will see a revival of that going forward. So all in all, I would say that we are more positive on domestic recovery if we take a 2-3 year view. And I think that's where the growth could surprise in the coming years.
Fantastic. On that optimistic note, and with so much to choose from, I think it's looking good for investors who are looking for opportunities in the market, regardless, of course, of what may or may not be announced. But we look forward to hearing what the Finance Minister has in store this 1st of February. Gentlemen, thank you so much for joining us and really discussing in detail some of the expectations this time around from the Finance Minister. Thank you so much.
Thank you.
If you like the video, do like, comment, share and subscribe.